Right, money day, money day, money day to everyone tuning in worldwide. And welcome to the brand new series we've got for you guys called The Formula. Okay, now this is going to be a new installment on our YouTube channel where we break down trades we have taken throughout the week for you guys. Okay, so very excited to share this with you. If you haven't already, please like and subscribe to our YouTube channel to get notified on when these episodes drop. Okay, hope you enjoy the new installment. So for those that are already in tune and already in the community, of course, you would have already got these breakdowns. But for those that are not in the community, hope you enjoy the information that we're about to share, of course. So today, on today's installment, I am actually going to go through the S&P, okay? So we're going to kind of case study and break down what exactly went on with the S&P last week, how you could have been able to capitalize, and you know, what it's kind of looking like in terms of what unfolded during the end of the week as well, because we had some inflation data from the US, which kind of sent things spiraling. So with the breakdown, of course, when we actually look at S&P, we always, going into the new week, we always want to break down what is kind of appearing on the daily chart, okay? And then we kind of want to take it from there. So I'm going to get into what exactly is on my screen and why I've got these markings in a sec. But I just want to point out the daily picture and how it kind of unfolded and what exactly we were seeing happen. So we've been in quite a range clearly on the daily, but we were playing into this candle of interest, of course, and we were stalling. We were kind of looking to see if price wanted to edge higher, but we were getting a reluctance to do so on the daily chart. So then just giving you the picture of where we are within the daily chart, we're clearly bearish. Clearly see the swing back up here would have been into a premium area for us to then take it lower. So going into the 4-hour chart, of course, I just want to show you the price action of what we kind of got from before this week, the week just gone, actually unfolded. So we was in a range clearly with these lows here and these highs up here, okay? So it wasn't the easiest read. Like going into this week, realistically, the S&P and the indices itself wasn't the easiest read because it had been in a massive range for quite some time in terms of the last where this high was created. We obviously had going back to the end of May and then going into the first week of June, we didn't really get a direction as to what we were hoping to see. But there were still moves available within the range, of course. But I personally don't like to play ranges for the simple fact there's not that much clarity in terms of are we going higher or are we going lower, okay? So where we kind of took that going into the new week, what you can kind of see on the charts now is that we have these lines here, and with these lines on our screens, they are basically when the midnights for each day starts, okay? So it's just a breakdown what the price action was per day going into London and New York sessions, okay? So that's what these lines are. If I go on a smaller time frame, I just want to kind of case study and then look through price action on the Monday, okay? So what we could kind of see here is that we had some lows. If I just extend this 1 second, kind of had some lows here. That was from the prior week. So then when we opened up to the upside before actually pushing lower. Now on the Tuesday, in terms of what we were seeing on the 7th, right, I was actually looking to see if these lows wanted to get taken out because there was clearly some liquidity resting below here. So I was thinking, okay, if we're going to push down, that to me would be the bottom of the range being broke out. So when we could potentially look to see how price would react, see if we could get some longs formulate after that that liquidity area was taken. But what I also noticed is that we did have this candle here where price had clearly reacted the week before as well. So when we then came into it, we did react and give a push to the upside without actually clearing those lows. So, right? So in terms of what I was expecting, it didn't quite play out in terms of it bounced off of this area again and pushed back to the upside. So why I say it wasn't the easiest to trade and why it was kind of confusing is because when you're in a range this big and you're not getting any main lows or highs in that range broken out, it's difficult for you to say the move is ready to go in one direction or not, because there's still two massive targets available to us. I know overall we are still bearish, of course, but in terms of what could have played out and what we could have potentially capitalized on was we could have got something where price decided to move down, take out these lows, and then actually push to the upside and take out the highs before potentially wiping out both sides of the liquidity within the range and then getting the real move. But again, going into this week, we didn't really get that. We did have a few fundamental news events as well, of course, but just seeing that those lows were still intact and then getting the push, I then thought, okay, maybe we want to target the upside, and then if we were to be overall bearish anyway, it would make sense to leave those lows there. But again, we didn't quite get that. That's not how it played out, unfortunately. But nonetheless, later on into the week, so going into the Wednesday and Thursday trading sessions, those were the days really where price looked a little bit clearer, okay? Now, why I say that is because if we look over on the 8th of June, going into that New York stock open, of course, we saw price push to the upside here. And then during the stock open and later on into the New York session, of course, we then got price breakdown. Now, why this was significant for me is because as we got this push down to here, we actually broke this swing low here, which would have been on a 15-minute time frame. I will show you that. But after doing that, we could see that realistically there was a clear indication of a push to the downside with that volume intact from after the stock open had transpired, right? And then going on into the next session, which would have been the Friday, I'm going to show you how you could have capitalized on that. So as we didn't get a break to the upside, there was clearly a reluctance to want to push to the upside in terms of being inside of that range and sticking inside of that range, okay? So what we was kind of seeing unfold was that if we look at price action here, right, again on a 15-minute, you can kind of see we had a push up, okay? Think about the time of when this was happening. This is all throughout the Asian session, which is cool in terms of like, you're not really, in terms of us living in London anyway, I don't know where you guys are based, but you're not really likely to see the main move happen on the indices in the Asian session for those that are not aware of that. But where the significance came in for me, again, was that when we got this push down here, where we were able to take out this swing low here, that for me showed the shift in market structure, okay? So the only thing that was missing in that regard, once that happened, was the element of time, because you're going on towards, an hour left, roughly about an hour left where these lows was made, an hour and a half left until the New York session actually shut. So you're not looking for the majority of that move to happen once that had been broken out due to the time not matching up with when you're likely to get the volume enter the market for you to then get your entry, okay? So looking at that, what I would do is just go back to the 1 hour quick. One thing I kind of want to show you guys is that where we had that move there, I'll just go too far, excuse me. Right, here we are. Where we had that move to the downside, this would have been a candle of interest, of course, for the simple fact that that push to the upside was what caused this move to the downside afterwards. So after seeing that, we would have been having price, we would have marked out the price action like this, okay? So where, if I just send this to the back, where we would have had that area marked, why it's significant in terms of pushing down and that swing low being broken on a 15-minute is that would have been a 15-minute swing for you to actually measure out in terms of utilizing your Fibonacci now, okay? So in utilizing your Fibonacci, where you would have had a swing high, and what makes this swing high is the fact that there's a high here and a higher to the left of it, which is lower, and a higher to the right, which is lower, okay? So on the 15-minute time frame, that would have been your swing high and swing low, right? So in seeing that, going into next day, what you would want to have seen is during either the London or New York session, you would want to have seen the price reaction, price actually pull back into a premium area so that you could have actually got your entry, okay? And we did get that around 11 to 12. So actually a little bit of a difference in terms of when you would likely see it. Normally you'd likely see it as the New York session or New York Open actually entails. So you're getting it during the London session, where at the end of the day it is still valid in terms of when you can get these things happen. But with it being an indice, you normally get it within the afternoon. But again, we did have news on that Friday as well with inflation data coming out, and I will show you how that transpired. But going back to the 15-minute time period, if you was waiting on that re-entry, right, what we would have seen unfold is that you could clearly see we have a imbalance area within that 1 hour candle, which is significant. We do get up in there eventually, where, for those that know how we trade, imbalances are important to kind of look for within areas of interest, of course. But once we had got that, we clearly saw a sharp decline. And again, I'll show you structure on the 5 minute and smaller in a minute. But in terms of getting that retracement from swing high to swing low, this is textbook in terms of what you could have kind of formulated for a trade out there, okay? So in seeing that, knowing that the only difficulty would have been is knowing that how far we would look to actually break down in terms of, are we going to break out of the range or not? Of course, you still have to kind of weigh up where your targets are. So in terms of the actual main target on the bigger time frame, which is a little lower, you could have still executed towards these lows here. These are still equal lows, of course. So it really depends on, you know, where you would have been looking to target. But in terms of your fib, textbook fib, you know, you could have easily captured this price action, okay? So played into that 1 hour eye candle. We had an imbalance area on the 15 minute. This is a 15 minutes Fibonacci swing. So you had an imbalance area within the 1 hour candle. So just thinking about confirmations that you could have lined up in terms of actually executing on this idea. So just going to take your attention to the 5 minute now. And I just want you to kind of look at how price action was reacting once it had got through in terms of reaching that 62% retracement, okay? So there was a willingness to kind of hold price at that level. We weren't really getting a willingness to push higher. So as you started to see that, okay, you can clearly see a wick up here, okay, capturing these highs here, and obviously bouncing into that imbalance area on the 15 minute as well. So then once we started to get that breakdown, we got final retest, of course, before we actually started to break down. So again, once you're starting to see price action on the smaller time frames, show you the picture that, you know, we don't have that willingness to go higher, and your confirmations are being met, you can now start to utilize, you know, these prime time areas for the best entry possible. Okay, so going back to the 1 hour time frame, I just want to show you guys how this actually played out, okay? What was actually able to unfold with the S&P. So for those that look at the S&P realistically, you're looking to then see the Dow Jones do follow suit. You're also looking to see the NASDAQ follow suit as well, okay? So all of the picture was the same for those individual assets, of course, but looking at the S&P is what gave the clarity to kind of suggest that, okay, we could be looking to head lower. So for me, the key thing was that 15-minute time frame structure. Even though it broke later on into the evening, it's something for you to be aware of in terms of there is a shift there. You also pair that with the eye candle here that was sitting within the premium zones, which you would have been waiting for in terms of your Fibonacci. You would have had one target here, of course, and then you would have been looking back at those areas drawn out where we didn't see these lows taken out. Is a massive target there. The amount of liquidity that was resting there, you could have then looked to actually utilize that as maybe a second TP itself. So as that unfolded, we had inflation news which came out in the afternoon at 1:30. So again, if I just go to 30 minute just to show you guys that, and we can clearly see at 1:30, where are we? 1:30, we actually pushed down. We did have a pullback up, obviously, during the New York stock open. That would have just been whiplash. It could have been a potential for us to actually get another entry, of course, as well. But knowing that you would have had that premium area up here, that is realistically where was the best entry was available in terms of you're way above any danger there in terms of the whiplash that you saw at the stock open and stuff like that. But knowing that that was what was within the time making sense, we had that I don't want to say pre-New York, but you could say pre-New York. 12 o'clock's like an hour before. It's kind of pre-New York open. So in seeing price get to that area, it's really a textbook trade for you to actually have executed on. And then as we then progressed, we broke a lot lower on that Thursday. Going into Friday, I'm just going to get rid of this fib now because I just wanted to show you guys what exactly unfolded with that. Going into Friday, after such a big move to the downside, it's a large range. With it being broken, you're not more, you know, unless we saw something formulate here, which looked like we were seeing buyers wanting to accumulate and things like that. There's nothing really to go off to say that, okay, we've taken out the low we're now looking to go and take out the higher. So where we was consolidating, price was likely to actually continue and break down lower, right? For the simple fact we didn't get no structure shift on the 15-minute. There's nothing like that. It was very flat after such a big move to the downside going into the Asian session. And then as we approach London, we got a slight move again to the downside to take out the Asian lows, but nothing major. So going into the afternoon, as New York opened, we literally saw price decide to just start melting down, okay? And then where we were looking at the bigger time frame picture, if I go back to the daily and stuff like that, what we could now entail is that where these lows are at, you've got lows here. There is an area in here, if I actually go to the 4-hour chart, okay, where this is actually, no, is it, I believe it's a, 1 second. 2-hour chart, excuse me. There is an imbalance area here, of course, where price played into before pushing upwards, okay? So we could now see price react again once after coming into this area. It is an area where we'd have to actually look to see what price wants to do after, you know, having such a big reaction to the downside. We now want to look to see, okay, can we get another reaction from this imbalance area? Because it's actually not fully closed, okay? We do have this low here. Of course, it could look to target that. It could actually look to mitigate out of this candle as well. So let's see how that kind of opens up and see what it wants to do, because after such a big move to the downside, you know, once we actually look at it for what it is now and what price is showing us, is that we can see this area of liquidity taken out. That area is invalidated in terms of the eye candle. Let me just get rid of these now, right? You are clearly got some equal highs here where it could look to play into this imbalance again, of course. You also have the top of the range, which didn't get taken out, where it could look to go back upwards after such a heavy move to the downside. It could look to target that as well. So there are a few things after seeing such a move to the downside where we could see it look to turn around, but we need that evidence. We need to see the market look and have a willingness to actually want to go back up, because right now, just seeing after such a heavy move, we could look to take out these lows as well before anything. So that's kind of the breakdown, guys. That is kind of the case study of what I kind of wanted to go through with the S&P and what kind of unfolded last week. Again, it wasn't the clearest of price action to begin with because we was in such a range, you know, from the prior week and leading into this week, we hadn't broken out of the range. So calling a top in the range and calling a bottom in the range is not easy. But following the price action and the shift in terms of what we were seeing on smaller time frame, right? What we kind of had with the 1 hour and what we have with the 15-minute shift of structure, okay? When swing lows or swing highs are taken out, definitely pay attention to that. Don't just treat it as like, you know, it's anything that's it's just random stuff happening in the market. It's not random stuff at all that's happening in the market. So thank you guys for joining on this new series of the formula. We will be bringing you one a week just on charts and trades that we had kind of lined up to see how they unfolded, to give you guys the picture of how they unfolded and what we were kind of looking at as and when live prices being printed, how we're actually you know, taking the information in and utilizing it to our advantage. So thank you guys. I hope you guys enjoyed this episode. Please like and subscribe. For those that are interested in starting their trading journey, please go over to litcapital.co.uk and make an inquiry so that you can kind of learn the kinks of what it is that we teach over at Lit Capital. So thank you guys. Appreciate you. Remember, every day is money day. Peace.